This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network from Kansas City and the National Association of Farm Broadcasting Convention. I'm Dustin Huffman. Well, taking a look at the show today, we're going to talk with folks from Growth Energy as we talk about the latest updates in the RFS, congressional moves, EPA moves here with the biofuels industry. We'll also take a look at that ag weather outlook, but first, let's run down those markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. We're at the end of another trading day, and we're talking with Tyler Schau of agmarket.net. Tyler, what did we see at the end of the day in the grains? What was really moving the markets out there?
A lot of movement on both sides throughout the day. I should say we were kind of positive in the overnight trade for a little bit. Things were just kind of humming along. At some point, I think it was probably 4 or 5 o'clock this morning, there was a press release from the UN that the grain export corridor would indeed stay open. We finally got some clarity on that. A lot of analysts have been saying for the last few days that they were pretty certain that it was going to stay open, and largely felt like that had already been priced into the market. Apparently, in the overnight, one of the things that people got to remember is it's mostly computers trading in the overnight, and they're programmed to trade on algorithms, and they're going to read headlines and they're going to trade it. And so as soon as that headline broke, all of the grains fell off markedly. When we woke up this morning, we were looking at large downward movements in corn, beans, and wheat. They kind of hung around most of the day. Near the end of the day, corn kind of battled back. So that grain export corridor deal has really been pushing markets both ways for the last 3 months. What are they going to do? Is it going to stay open? Is it going to close? And I guess now we at least, for the next 120 days, we've got some clarity there, and until the next thing that happens.
Now, as we look at the volatility we're seeing, and you mentioned, the fact that, holding on and trying to wait for better days may be a risky move. I mean, obviously, risk is always part of the game, but what can farmers be doing to minimize that risk, but still kind of give themselves that safety net, especially if they're not needing to sell right now, where they can maybe take advantage of the market does go higher?
Yeah, we've been saying this for quite a while with Ag Market that, don't forget, we've got extremely profitable levels in all grains right at the moment. If you do a break-even analysis or return on investment for most operations, it's going to look pretty good. There's a lot of tools out there to lock in some of those profits, or at least put a floor in using some type of put call strategy that, in case things, who knows what the next major headline from the geopolitics is going to come out with. We want to protect ourselves from those things we don't see coming. If you don't like selling here, like I said, there's strategies that allow for some upside flexibility. And, we can put those on to where if this market goes higher because of those geopolitical tensions, you've got a floor under stuff. And we think that's really important, like I said, with these very, very good profitability levels that are baked into this market right now.
All right. So if we look at the livestock side of things, Tyler, what are we looking at today?
Most of the cattle markets were higher. Your fat cattle markets were all about $1 higher. Feeder cattle got some movement back up, $2 and some cents move higher. It's been a lot of moving around in that market over the last couple weeks, back and forth, trying to figure out what the direction is. I'm not real certain that anyone has. I mean, one of the things we're hearing is that there is enough beef. The packers are able to stay steady, but yet they're still bidding that 150 in the south and the 152 to 153 in the north. That's kind of where their cash bids have been coming in for the last week or two. Sometimes these markets just they move just because traders want them to move, and I think that's some of what we're seeing today. There wasn't really anything out there in the news that said fat cattle should be drastically higher. Hogs, one of the things we look at is that pork cutout values from the USDA and the cash index from the CME. Both of those have been drifting a little bit lower. So that's putting a little pressure on the hogs here. It'll be interesting to see how they pan out over the next week or two.
All right, Tyler. Well, of course, great information as always. If folks want to make market strategy plans with agmarket.net, what's the best way for them to get in contact with you all?
Check out our website, agmarket.net. You can sign up for our Ag Market Intel. You can check out our contact page, look up any one of the brokers there. Also at the top, you'll notice we're having a conference in Nashville the first weekend in February. Should be a really good informational meeting. And if you want to reach out to me direct, my phone number is 701-987-6009.
All right, Tyler. Thanks so much for the insight. We'll talk to you again real soon.
You bet. Take care.
Well, that again was Tyler Schau of agmarket.net. Let's go ahead and run down those closing numbers. That comes to us courtesy of the folks at Bar Chart. December corn was up 2 1/4 at 667.5. March up 1 1/2 at 669 even. January beans down 12 1/4 at 14.17 even. March down 12 1/2 at 14.22 1/4. November 23 new crop soybeans 12 1/2 cents lower at 13.66 1/2. January meal down $1.50 at 402.50. Soy oil $1.88 lower at 70.22. Chicago wheat down 10 3/4 at 806 3/4. Minneapolis down 11 3/4 at 953 3/4. Kansas wheat 17 1/2 lower at 938 even. And oats for March were unchanged at 392 3/4. December live cattle 95 cents higher at 152.75. November feeders were 15 cents higher at 175.85. December lean hogs down 60 cents at 84.97. February up 45 cents at 90.80. Pork cutouts 37 cents lower at 95.52. Class 3 milk a nickel higher at 21.03. And that's been our Ag Market Recap. We're going to take a short break and hear from our sponsor. That is the Iowa Soybean Association and the Soy Checkoff. When we come back here to Kansas City and the National Association of Farm Broadcasting Convention, we're going to talk with the folks of Growth Energy right after this on Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, of course, with the EPA taking control of the RFS and the RVOs, there's a lot of concern about what's going to happen for the future of ethanol in the coming years. Is it going to get enough billions of gallons, the 15 billion magic mark that we need sometimes to get the industry going? Or are we going to be at the whim of another EPA administrator that promises one thing and does another? Well, we talked with the folks at Growth Energy here at the National Association of Farm Broadcasting's Trade Talk here in Kansas City. Here's what they had to say. We're talking right now with Chris Bliley of Growth Energy. And Chris, lots to talk about. First of all, thank you for taking the time to visit with us today.
Yeah, no, glad to be here. Great to see you, Dustin.
All right, so let's talk about the RFS. That's one thing that's really become interesting as Congress no longer really has the power to do anything about the volume limits and volume amounts. So what's going on? What are we looking at going forward? And what kind of challenges are we maybe facing? What kind of victories are we facing?
Yeah, I mean, I think, so we saw a strong RVO proposal out this summer for 2022. We're frustrated with the delays, but we, through litigation, we worked and put a consent decree into place so that the proposal for 2023 and beyond will actually come out here the end of this month. We're looking for a strong proposal that builds on 2022. So at least 15 billion gallons of conventional biofuel, an additional 250 million gallons that we won in litigation, approval of new pathways, and improved modeling that really captures the best available science.
Now, obviously, the rulemaking goes to the EPA now, and, for lack of better, recap, I mean, the last two EPA administrators said they were going to take care of the ethanol industry and biofuels, and they really didn't do a very good job of it. What confidence can we have in Administrator Regan and what he's doing?
Well, I think they've sent some strong signals. Certainly the revision to 2020 was, very disappointing. But again, 2022 was the highest volume we've ever seen. They also ended the years of refinery abuse that cost, nearly 4 billion gallons of biofuel demand. So we're very encouraged there that the days of abuse of small refinery exemptions are over. And again, that 2022 volume we think is a strong signal for 2023 and beyond. Administrator Regan has been very, forthright that he wants to see a strong and growing biofuels industry. And so we're going to hold him at his word, and I think we'll be encouraged by that proposal. This will also be the year, as you talked about, that, it really is giving EPA more authority, and so it will likely be a multi-year proposal. We'll actually see probably 2 years, maybe 3 years, so give people a little more certainty and hopefully get EPA back on a timely manner.
All right, another thing to talk about, obviously E15. We know the story. We had it year-round after a long fight. It got taken away from the D.C. Circuit Courts. Then we had the president in Menlo earlier this year to allow it to go through in the summertime to help with mitigating some of the gas prices we saw. And we know that ethanol and E15 have been talked about in relation to gas prices for quite some time. Now we're not sure what next year's going to bring, and there's governors taking matters into their own hands. I mean, kind of tell us where we're at right now with that whole mess of a situation.
Yeah, no, you did a good job capturing. I mean, this year we were glad to see the president get out to Poet Menlo and make the announcement, and EPA really follow through on the emergency waivers that got us through this summer. We saw consumers saving up to $1 per gallon with E15, an increase of sales of 35%. And so we really need that access going forward. You saw the 7 states sort of step up and say that they wanted to opt out to provide a permanent solution in those states. And ultimately, we want to see a national solution. We're going to continue from a growth energy standpoint to really push any and all avenues we can to ensure that consumers continue to have access to this fuel because of the economic benefits, the air quality benefits, and really the benefits to the ag economy as well.
All right, and then when we go to the gas pump, we see E10, we see E15, we see E85, but there's a lot of E's in between 15 and 85. Where are we at for seeing some of those higher blends, and what is the future looking like for the industry and the plants?
Yeah, no, I mean, I think that's a really good point. I mean, there has been numerous data and research to show the benefits of a mid-level ethanol blend, a high-octane mid-level blend like an E25 or an E30. There's been legislation, the Next Generation Fuels Act, that would really drive that type of mid-level blend approach. We continue to look for that. We continue to look for ways for EPA and other agencies to incentivize mid-level blends like that, in addition to E15 and E85. I think the other big piece here that we're addressing now is plant innovation as well as innovation on the farm. We're in an era where it's really critical to measure greenhouse gas emissions, and our plants are doing everything they can to reduce their footprint as well as capture what's being done on the farm. And that's going to be really essential because not only market fuels like E15, E85, and E30, but new markets like sustainable aviation fuel, potential for marine fuel, potential in diesel, and as well as markets on bioplastics, feed, and sort of the traditional products we've been involved in.
All right, so, looking at a situation where you have an administration that seems to be pushing EVs, but yet an EPA under that administration that wants to see growth in biofuels, how do you kind of manage that, for lack of better terms, an ironic juxtaposition between the two?
Well, I mean, liquid fuels are going to be on the road for decades to come, and so we are a critical piece to getting to net zero. You can't get to net zero without biofuels. So we're going to continue to compete in the space, whether that's higher blends, whether that's involvement in the harder to electrify sectors like aviation and marine, and continuing the innovation at the plant and on the farm.
All right. Well, I thank you so much for the update, Chris. I appreciate all the information that Growth Energy provides us, and we'll be talking, I know, in the future about anything else that changes.
Great to be with you, Dustin, and hope the rest of the show goes well.
All right. And that was the folks at Growth Energy here from the NAFB convention. Now let's go ahead and take a look at the Ag Weather Outlook. Well, we can only go off the forecast of what we're seeing in Iowa, but the snow is obviously still a part of that forecast and cloudy skies, and the temperatures are going to start dropping. In Kansas City here where we're at, it even got a little cold today too. So we're starting to see that drop happen across much of the Midwest. So what does the next 24 hours have in store for Iowa in the National Weather Service forecasts? Well, today we saw scattered flurries taper off across much of the state. Highs today were in the mid-20s to the mid-30s. Now that is going to start to change for the cooler here starting tonight, and we'll see the skies begin to clear just a little bit, partly to mostly cloudy skies with a few scattered flurries hanging around, but temperatures will be in the single digits, 7 to about 18 degrees. Tomorrow the sun's going to start to peek through and return, but we're going to see much colder temperatures. Highs will only be in the upper teens to the mid-20s. Looking at the affiliate weather map for tomorrow, Cherokee partly sunny and 18 degrees, Shenandoah sunny and 25, Des Moines will be sunny and 21, Waterloo mostly cloudy 20, Albia partly sunny and 22, and Clinton will be mostly cloudy and 24 degrees. For more detailed forecasts in your region, turn to your local Iowa Agribusiness Radio Network affiliate. And that's been our Ag Weather Outlook. And just like that, we're at the end of today's show. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, Twitter, TikTok, LinkedIn, and on our YouTube channel. While you're there, don't forget to subscribe and hit the bell icon so you're notified whenever we put out a new video. Also, don't forget to check out our free Twice Daily Market podcasts from Google, Amazon, Apple, Spotify, and Podbean. From the Westin Hotel and Convention Center in Kansas City, I'm Dustin Huffman. For Mark Magnuson and Riley Smith, we thank you for watching. This has been Ag Matters PM.